There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone. Today I want to talk about the market structure a little bit more, in particular the open market, the open exchanges, the pre-market, and the aftermarket. A lot of you are getting a ton of misinformation, and I'm always surprised at how much misinformation or lack of proper information and education that is out there. It is astounding that the retail crowd is given so much misinformation or no information about things that are extremely important to them. It is important that you understand the market structure, how it works and operates, otherwise you will lose money. Anyone can get behind a car wheel, figure out where the gas is, figure out where the brake is, and how to steer. But that does not mean that you could go to the Indy 500 and drive a race car at hundreds of miles an hour and survive. It doesn't mean that you could get into an airplane and look at the altimeter and the throttle and all the other various parts of an airplane and successfully pilot that plane by yourself. A lot of you are what I call, and what the IRS calls, hobby traders. Hobby traders are people who like to do things for themselves, and there's nothing wrong with do-it-yourself. A lot of people like to build their own home. Do-it-yourselfers who do repairs or modeling for their home or build a home from scratch are people who are very inventive and they want to learn to do things for themselves, and there's nothing wrong with that. But if a person is going to build their own home, it usually takes them 5 to 10 or 15 years to actually complete the house. Where if a professional general contractor came in, that house would be built in 3 months. I have spoken to many, many traders over the years, thousands upon thousands of them. A lot of them come to me, they're do-it-yourself traders, they're hobby traders, they're doing it for fun. There's nothing wrong with doing it for fun. But in the end, didn't you start trading to make money, to become profitable, to either retire early or to augment your income or to trade full time because you just love the stock market, you love trading, and you want to do it full time? I have had so many students over the years who've come to me after they've been trading for 5 or 10 or 15 or even 20 years. And they can't figure out why they continually lose money and they continually erode their capital base. They just can't figure it out. And the reason this happens is because they do not understand the internal market structure, how it works. They assume that if they have a trading strategy or a MACD crossover or a red light, green light system or some other system that tells them when to buy and when to sell, that they're going to be profitable. Those systems are so easy for the predators and opportunists to take advantage of, it's not even funny. You're just setting yourself up for losses because you have no idea what's going on in the internal market structure. We have 9 different market participants, and at one point I will go through and explain each one to you. 9 different ones. They have different venues. They have different lot sizes. They have different capital bases. They have different intent of the investing that they're doing or trading that they're doing, and on and on and on. Different order types. They're all completely different, but they leave a different footprint on the chart. And I was talking to some gentlemen earlier last week, and we were talking about pre-market and aftermarket and open market, and I realized that the gentleman did not understand the market structure at all. We were talking about a company that was gapping up after the market closed. And they assumed that a retail trader could place an order with their retail broker after market close, which is true. But what they assumed, which was wrong, was that they could buy the stock at the end of day price on an aftermarket close venue. When the market is open, the exchanges are open for business. And a lot of the opportunities occur on the exchanges. So there is heavy trading going on directly to the exchanges. Not as much as there used to be, because there are now 42 different venues, which are the different areas that stocks can be traded, bought, and sold in the United States alone. That is huge, because when the internet first came alive in the 1990s and there were the first online brokers for retail traders, you really pretty much traded through the exchanges or ECNs, and that was all there was, and the very few exchanges. Nowadays, there are far more venues. After the market closes, those venues and exchanges close. That means that you are trading directly with your broker in an illiquid market situation. When the exchanges are open, there's very high liquidity because all the venues are open and you can tap into the resources of someone who wants to buy or sell from all over the place, and they can tap into you. Now, most of the transactions that occur during the day are automatic fills by computers. The dark pools set their orders, and a computer automatically triggers those orders to buy or sell incrementally over time based on a complicated time weighted at average price order and other types of professional orders. So they're buying incrementally. A computer just takes care of it. Most of the professional side is fully automated. They set the type of order they want, they set their price parameters, and they walk away. Now, some of the professional traders are trying to execute on the penny. They are watching the stock and they are actually trading live in the market as it is open. All professionals know that after the market closes, that liquidity evaporates. The liquidity of the markets disappear because all those venues are closed. So after market hours are very high risk of having extremely wide spreads between the bid and the ask. During the day when the markets are open, that bid-ask spread is usually a penny to a half penny. So there's a very, very tight spread. If the market closes on a stock that is going to announce earnings after the market closes, the end of day price is what the pro traders try to get into at the end of the day, because they know after market hours are not liquid, usually, and that price can fluctuate wildly because there are only a few broker dealers open to transact those orders. For the retail side, there is only one area you can go after market hours, and that is your broker. Your broker has inventory, and some brokers do provide after-hour trading transactions. But you're trading with your broker, not the broad general market as you do when the market is open. Yes, most of the time the broker will fill your order regardless of when you place it. But with the open market, there's more liquidity to tap into. If the market closes and the company reports its earnings, and that stock gaps up or down, let's say 8%, your broker will not fill you at the end of day price. Your fill will be at the 8% higher or lower or greater, depending on the inventory on hand, the demand that the broker has. If there's high demand and he's doing an over-the-counter exchange transaction with you, which means that he's providing the liquidity themselves, then the price that you pay can be outside of the national best bid offer because the exchanges are not open. So you can get a very, very poor fill on after market hour transactions. That's why I don't recommend this to my students. So the stock gaps up. Let's say the stock gaps up at open. You've already paid a high price for it. You do not have all that value that your gurus and recommendation services and strategists are telling you you have. You have been filled at the 8% above the close of the previous day. And immediately the pro traders who bought the price at end of day at a much better price than you did start selling, and the stock moves down below the price of your aftermarket hour fill. If a stock gaps up or down and you buy it aftermarket hours, you are going to be filled at the aftermarket hours price, and it will not be a good fill more often than not. It does not matter how much volume there is on the aftermarket hour. The more volume, the higher that gap is going to go. And then when everybody who wants to buy aftermarket hour, which are not going to be very many, the stock holds there at that price or higher, because in the morning there may be pre-buy orders. There may be other people coming in like HFTs pre-buying, and that could happen. So you're not buying it at a great bargain price by waiting till aftermarket hours. And it is very dangerous to buy pre-market hours because there's no liquidity. Pre-market is the realm of the dark pools. They're buying and exchanging inventory between themselves and getting ready for the day's action. On the retail side, your retail brokers are looking at their overnight orders that they will fill at market open, if that was how you presented your order to them. And they light those orders so that the rest of the market and all the venues can see what they have. The retail brokers are required by law to light their orders, your orders that came in overnight or pre-orders in the morning, ahead of open, before the exchange is open. They're required to light those orders and show those orders and the quantities that they have before the market opens and after the market opens. They have to do this because the SEC was concerned that the retail brokers filling 95% of all their orders, the top 6 brokers in the United States do this. They fill your orders. It never reaches the exchanges. We're going to be having spreads and such that was harmful to the retail trader or investor. The downside of this law, which was intended to protect you, was that now the predators and the manipulators and the opportunists that are watching pre-market see those lit orders and can calculate whether all of you are going to be rushing to buy a stock in particular because it's been tweeted and twitted and there's been aftermarket hour volume and so on and so forth, and they can front run you. At market open, all your broker has to do to make some money is delay it for 90 seconds. And it's all very legal. So you think, oh, the market's corrupt. No, it's not. The market has rules. It has regulations. It has laws. And everybody has to obey them, or they go to jail, they get fined many millions to billions to trillions of dollars. And those go on all the time. The SEC is constantly fining and penalizing, and people are going to jail. It's just not in the retail news all the time. So it is a very orderly and controlled market. The reason you're not successful is you have no idea what's going on, and you walk straight into a brick wall and wonder why you get bloodied. The reason you do not have consistent success in your trading is you have no idea how the market structure works and how you need to have a trading process that takes advantages of those situations that will help you become consistently successful. Instead, you're trying to do it yourself, which is fine, but then your results are going to be lousy. Deal with it. If you really want to become a consistently successful trader, you have to come to TechniTrader because there is no other company anywhere, including your brokers, including your gurus, your recommendation services, tweets, twits, and whatever, are not out there to teach you what you need to know. They're just doing it for the money. Our students' success is our success. We build our reputation on the fact that our students are more successful than any other group of trained retail traders. We give you the hard, cold facts and reality. We teach you the market structure. We show you where the pitfalls are and the risks, and we give you a trading process. A trading process includes strategies, trading styles, and other things. That is what's missing when you're a do-it-yourselfer. You're trying to do everything on a strategy, but you have no trading process. You're trying to do swing trading, but you have no trading process for your swing trading. You're trying to long-term invest, but you have no investing process for your long-term investing. You're just jumping in emotionally and risking all of your hard-earned money. And the more you risk and the more you lose, the harder it becomes. It's not only your money that you lose, it erodes your confidence, your self-esteem, and your ability to feel like you can do this. I'm encouraging you to bite the bullet and come and learn what you need to know. You will save yourself a lot of money, a lot of time, and a lot of frustration and the erosion of your capital and your self-confidence. When you start with TechniTrader and you build upon the building blocks that we provide and the trading process, you start your career as a trader with consistent success. Yes, there will always be some losses, but the losses will be minimal and few, and the profits and success will be great. So come to TechniTrader, look at our courses, study the courses that you think you might be interested in, then read the outline. You have to click on it and open it to read it. It is not on the page. The outline is on a button. You have to click either a syllabus or course outline. You click on that button that says course outline or course syllabus. When you click on that, it will open up a very large document that shows you in great detail what is taught in that particular course. You can read a couple of outlines. You should also give us a call, because when you call in, we will be able to tell you more about the course, and we will ask you questions to ensure that you are selecting the right course for you. We have several courses because we teach a wide variety of people. Some of them are brand new and have never traded at all before, know nothing about the stock market. And some of them are very experienced and have been trading for 10 or 15 years. Each of you needs a different type of education. So come visit us at TechniTrader. You will be amazed at what you do not know that you do need to know to be consistently successful. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.